Okay. So the first ground rule is there are no ground rules. Okay. So because we're a small group, this can be like a free for all. We do have a chat. And what I'd like is if everybody could just introduce themselves, put them, where you found us. I know we have a bunch of our students here. Thank you. Give us your social media stuff, whatever you want to share with us, so we can get to know you a little better.
Do you want people to put it in the chat, or do you want everybody
Yes.
to? Yeah,
In the chat. Yeah, so just say hi.
that would be better.
Yeah, I see Tammy Raccanello. Hi, Tammy. I haven't seen you in years. Yeah, how are you?
Hey, Joe. Good, thank you. How are you?
Been a long time. How did you make it on my list?
I don't know. I guess I'm subscribed to your
Oh,
subscribed to your newsletter. So yeah,
thank you. And you showed up anyway.
and I did.
All right, so I think everybody knows me. Like I said, I haven't met Joshua or Martin before. And what we're gonna do, so if you have any questions, you could either just interrupt me or put them in the chat. And hopefully walk away with something that you didn't know before. That's always my goal, is to enlighten people, to empower people on how to do all the things that they complain about rich people doing when they don't pay taxes. So one thing I've learned is that a lot of the things that these people, and it's not like, rich people don't pay taxes. They just don't pay proportionately what, let's say, unrich people pay. They pay a lower percentage, and Warren Buffett even talks about this. He says, he pays a lower effective tax rate than his secretary. So what am I doing here?
I don't know. We can see your screen.
You can't see my screen, right? But I think
Yeah.
I took off the.
We can see all the slides too, I think.
Yeah, you're not supposed to see them all. Okay. All right, so we got more people coming in. That's good. Anyway, so so the idea is that a lot of the strategies that wealthy people employ are available to anybody. That's the secret, and it's not a secret. Most of them know this because they do pay a lot of money for fancy accountants and lawyers, and that's what I do. That's what my purpose in life is to share this information, the knowledge and experience that I've gained over, it's hard to say, 40 years, Susan.
I know.
You're one of the few people that have been doing this longer than me. And I actually complimented you today I was teaching Josephine some things, and I told her how blessed she is to be working with somebody like you.
Well, thank you.
Not to take it granted. So Susan, if you don't know her, she worked for a bunch of years for somebody named Michael Garber, who really defined why small businesses fail. It's not because of all the reasons that you read in the statistics by the Small Business Administration. Yeah, those are reasons why businesses fail, but not brand new businesses, not micro businesses. And Susan, would you like to share your knowledge with us for a second?
Sure.
About why people actually fail in business?
So people with small businesses tend to be people who start a business doing what they know how to do. And what they don't know how to do is how to run a business that does what they know how to do. So they know how to do the work in it, So they become the technician, but then they're wearing all the other hats as well, like the management and marketing and sales and whatever, finance and the finance division of their business.
Technical support.
Technical support, everything, basically you're wearing all the hats. And so Michael Gerber wrote this book called The Entrepreneurial Myth, which is basically describes this philosophy that people have an entrepreneurial seizure. They think, why should I be working for somebody else and letting them make all this money on my work when I know how to do this work better than the owner does? So they start a business doing what they know how to do, and they don't know how to do all the other things that are necessary to make a business work. And so his philosophy is he actually is a very good mentor for people. And when I worked for him, it was called the Michael Thomas Corporation. And we were a coaching organization, coaching small business owners how to do all the things in their business that they don't know how to do.
Oh, so you were actually, I didn't realize that you were, so the funny thing is that what was it, Michael Thomas?
Michael Thomas, yeah.
That was before his business actually went belly up.
That one, I worked for him in 1976 to 79.
Okay, so were you there when everything imploded?
No, I left before that.
Okay, so this is just another example of people not following their own systems or advice. So what happened was, and he talks about it in the audio version of E-Myth Mastery, where they basically went bankrupt, and for years he refused to file for bankruptcy. But what happened was the business got out of his control. He relied on people, people. They fell behind on everything, their taxes, their rent. And, if he had taken this route, I don't think that would have happened, sis.
Well, he did a lot of the things that he recommended people do, but he didn't do all of them.
Right. So nobody's, but luckily lucky for him and his wife, they survived. He wrote, I don't know how many more E-Myth books.
Well, he wrote E-Myths for all the specialties, and basically it's the same book with a twist.
E-Myth for plumbers, E-Myth for everybody.
Right.
So, that's I tell people, be careful what you ask for. And what you said, everybody can do things better than their boss until they actually try to do it.
Right.
So one thing that I could do, one of my superpowers, I only have a couple, most things I don't do very well. That's why I have people like you and Belle and Janine, who did this slideshow for us, doing those things, and that's part of the E-Myth, right?
Well, the concept is really to define what are all the functions in your business first. Do an organization chart basically with based functions in your business, and then start replacing yourself in the functions that you don't know how to do with people who know how to do them.
Yeah, and one of them is actually accounting.
Right.
So my mentor, a friend of yours, Larry Broughton, who coaches me, used to tell people, and it used to kill me because he would get up there and tell people they're going to fail. He's like, you're going to fail. And that killed me because I didn't know what he was saying. And I like to say we make mistakes, we learn by them. But another thing he said was, don't go into business if you can't afford an accountant. And so this is who this is for. This is for anyone that believes that they can still learn something about business, that wants to learn, that wants to get some direction, some idea, some new tidbits on how they might be able to run their business a little better. And this is not for you if you're not here. So if it's not for you, you're already not here. So that's good. You don't waste your time. You don't waste our time. But if you are here, okay, what I promise you is that you are going to leave with something at least to think about. Something that actionable stuff that you're going to say, you know, I wish I heard about this a long time ago, but we can't go back in time, right? So, you know, hopefully you're going to leave with something. And if you have an account, you're going to ask them, how come you never told me that? Or if you don't have an accountant, you'll be looking for somebody that will guide you with some of this stuff. And like I said, so hopefully you're all going to stay till the end. Like I said, because hopefully I'm going to teach you something. Maybe you could teach me something, and I'm always open for that. You know, some of my best learnings came from people that had no business experience at all, because they had common sense. And that's something that most entrepreneurs lack. We lack common sense a lot of times. I'm going to guide you because some of this, you know, everything that I'm showing you is not new. Okay. All of this stuff has been tried, tested, proven. I'm not going to, you know, guide anybody towards something that I wouldn't do myself. Okay. And at the end, I'm going to give you the secret that the IRS just absolutely refuses to make public. They don't want you to know this. They don't want, because I use it as a weapon many times. And it's so simple. You're gonna be amazed. So if you stay till the end, at the very least, anytime the IRS or somebody challenges you on a tax write-off, all you got to do is say this magic word. Okay. Also, imagine not having to worry about the IRS. Imagine having more cash in your pocket because it's not going to the IRS. Think about all the toys you could buy. Christmas is coming up. Think about all the things you'll be able to buy if you have grandchildren like Susan. I know Susan likes buying her grandchildren cars. So
Buy them cars. I lend them the money to buy cars.
you lend them the money, we'll be writing those off as bad debts this year. So that's and what I love to do is I love to give people peace of mind, because so many times, and I'm not just making this up, that people tell me they could sleep better now. And really, if you know anything about any of this stuff, it really comes down to your mindset, which I don't teach anyone. I just know that it's all how you look at stuff. And if you're afraid of the boogeyman, then the boogeyman's going to get you. But what I do is I make I can tame the tiger for you. I can show you that the IRS is not actually out to get you. That's all a bunch of public relations to get you, actually to scare you into filing and paying more taxes than you usually owe. Okay, because you're not aware of some of these out of the box deductions, and some of them, because a lot of times we find mistakes or things that people could do on their tax returns that could actually put money in your pocket starting immediately. Okay, immediately. Now, I'm not saying that always happens, but it does happen. And I'm going to show you how that works. So why am I qualified to teach you this stuff? So Tammy knows me for a long time through the Long Island networking community. I've been a CPA for I think 35 years. And I've been doing people's taxes for more than 40 years. And I've worked with literally thousands of small business owners. And primarily always on the same thing. When I boil it down, it was always about creating a good set of books and records, identifying what's going on in the business, and then maximizing tax write-offs. So, you know, I've specialized in working with businesses, not so much individuals. Yeah, I've done plenty of individual returns, but mostly just for my clients. So I'm really a small business accountant. Okay, so I already said this. And not that it matters to you, but I love teaching and helping people keep their money. And sometimes they have enough money to pay me. So here's the first one, and just it's kind of funny because, you know, and Belle Belle is one of our social media people. She's also, Belle, if you could put the link to your YouTube channel in the chat. She actually heard, and this is another reason why you don't want to do business with your family. Right before the call, I had to talk to my cousin, who I had already talked to about writing off her son as an employee. Okay, and she decided she was having a panic attack, and she decided he's 10 years old, and she's worried about him qualifying for college scholarships or something. And so I'll give you her situation, because that's really, she's got the ideal situation for this. She was an employee, a licensed therapist, and she was making $60,000 a year with very little, almost nothing that she could do on her taxes, other than claim her son. She was a head of household, and she got some credits for the unbelievably expensive child care day camp that she put him in every summer. So other than that, and she is like the poster child for most people, because today most people can't itemize their deductions. Most people get what we call the standard deduction. Okay, and that limits you on any kind of tax planning. Okay, they've really made it very narrow for working people. You can't because you can't itemize, you can't even take things like charitable deductions, real estate taxes, unless the only people that can really itemize are people that have a huge mortgage. Okay, so you're limited. So what I've been teaching people is one of the best ways to lower your taxes is to actually start a business. Okay, the IRS used to have, and they still have this they call it a hobby loss rule. If you're an unincorporated business, you're a sole proprietor, they want to see you make a profit, which you're supposed to be making profits, because that's the whole idea of being in business. You have to have a profit motive. Okay? But now, because of the way the rules are, some of the things that are happening they're issuing 1099s now to people like my mother, who has a little Etsy store, and she does things like what Susan was doing. She makes stuff, and it's really a hobby. But now they're going to give her, so what they've done is they tell people, well, now you're actually a business, because we're going to make Etsy and PayPal and even Venmo. Okay, Belle, can you put the mute button on? So they tell people like my mother and anybody doing any kind of business that, okay, we don't want you to deduct losses because you're in a hobby, but we do want you to report the taxes. We want you to report the income so you could pay taxes, which is, not surprising that it's like an oxymoron. Okay, they're in conflict with each other. So one of the things, and I don't even know if this is on the list, but one of the things I've been doing now for years is telling people to open up an S corp. Okay, even people like my son-in-law who legitimately has a hobby. He buys and sells posters. He does not make money at it, but because the IRS now is going to give him a 1099, I said, well, we can't write off why can't we write off the expenses? We can risks getting audited. Okay, so the IRS likes auditing Schedule C sole proprietors, especially when their expenses are equal to or more than their income. When you're an S corp, there is no hobby loss rule. Okay, and this is where the discrimination starts between sole proprietors and corporations. Now, a couple of months ago, I heard that and it was a conservative radio show, and they were complaining about Joe Biden has made millions of dollars on a book that he wrote, because according to them, nobody bought his book, and it was all a money laundering thing. But they mentioned that they said, and he escaped paying taxes because he set up an S corporation. And what they said is what I'm trying to change. They said only rich people have corporations. Okay, you don't have to be. That's what happened. That's why they created S corps in 1958, because there was a big economic gap between sole proprietors and corporations. But you don't have to be rich to have an S corp. Okay, so I set my mother up with an S corp. I set my son-in-law up with an S corp, and guess what? My mother isn't even required to file a return. Okay, she doesn't make enough money. But now think about this: if she grossed $10,000 and I think I probably spend that in her Etsy store, she would have to pay $1,500 in self-employment tax. That's if she didn't know, and she's lucky for her, she has a son as a CPA. So that's not going to happen to her. My son-in-law now can actually write off the extra room that he stores all of his posters in, and yeah, he's got a bunch of write-offs. So I believe at the end of the day, his expenses are going to be more than his income, which my daughter will have to take that up with him. I'm not getting involved in him losing money, but that's another story. All I'm doing is I'm preparing the tax returns. So what does this all have to do with writing off your kids? Okay, so back to my cousin who decided that, and this was because of COVID, she started doing her therapy online. They call it telemedicine. And she realized that she liked working from home better than going to the office. She got to be with her son more. And then, then what happened was she started doing it part-time. And so she has a cousin who's a CPA, and I set her up with an S corp. So all of that part-time money was going to her S corp while she still had the W-2 job. Well, guess what? She discovered that she was making more than twice as much money doing her own thing. So this is where that E-myth thing comes in. Now she's got to run a business. Now, so she quit her day job. She went from making 60,000 a year to 120. So what does she do? I tell her how much she's gonna have to pay in taxes. She starts freaking out. And then I had to start teaching her. Well, now you're in a higher tax bracket, but because you have a business, we could start taking advantage of some of the things that these rich people are doing. Okay, like putting your kids on the books. Okay. Now she's in, just to make things simple, let's say she's paying an effective rate of 30%. Okay. That's between federal and state. So for every $10,000 she makes, she's paying $3,000 in federal and state taxes. Well, I said, well, you know, you're spending money on Johnny, right? You're buying him clothes. What if you hire Johnny and instead of you buying the stuff with after-tax dollars, you pay him a salary and you're saving 30%. Now, the drawback is when you have somebody on salary, you got to pay them, you got to pay payroll taxes. Okay, you can't escape that. So we're getting, okay, we got a lot of late comments. We're getting a lot of bells ringing. I apologize for that. Bell, I don't know if we could, yes, thank you for letting me unmute myself. Anyway, so you still got to pay the payroll taxes. But what she's doing, and also let me stress here that she doesn't get any tax write-off other than her son making her a head of household. She doesn't get to deduct him like we used to. We used to be able to get a tax deduction for every child. Okay, well, the government, the IRS, Donald Trump said, we're not going to subsidize you if you want to have, 8 kids. So effectively, those people with 8 kids were getting a bigger tax write-off than somebody with no kids. So they said, no, it's just going to change your filing status. So lo and behold, you don't get to write off your kids anymore unless you have a business. So now, because the standard deduction is almost, it's this year, it's $12,950. So anybody could make almost $13,000 and not pay any taxes. So by putting Johnny on the books, let's say for $10,000, cousin Brienne is saving $3,000, but she's paying $1,500 in Social Security tax. She's ahead $1,500. Now, I don't know about you, but if I could save $1,500 on anything, I'm doing it. Okay. She had other, she let her emotions get in her fears. And she's like, oh, I don't know if this is going to affect his future. Well, guess what? Because now Johnny has $10,000 worth of earned income. Johnny could put that money, he could put up to $6,000 into a Roth IRA. Okay, Johnny can do stuff with that money. She could also set herself, I don't want to get ahead of myself, but just that one simple thing, putting Johnny on payroll, which is totally legal. Okay, the IRS even has a whole section devoted to putting your kids, hiring your children. Okay, so it's not a new thing. Also, kids pay taxes too. There's kids that are in commercials, kids that are child active. They're all filing tax returns. Okay.
But don't you have to pay them to do something?
Well, yeah, they have to do something.
They have to do something, right? To get paid
Well,
for it.
it could be, don't bother me while I'm working. It could be, help me straighten out my office. Yeah, you give them stuff to do. So, and they could even be a spokesperson. when I started a cleaning company early in my career when I didn't want to be an accountant. I started a side business. I put my son on a postcard, and he was my mascot or whatever. He was my spokesperson. And it was a picture of him all messed up with spaghetti sauce all over his face. And I said, don't be like Anthony. Let us clean you up. Okay, but yeah, and to be honest with you, the worst thing that could happen, and I've never seen this happen, is the IRS will come in and say, well, what were their duties? That's just not going to happen, not in reality. Okay, now I'm not saying do stuff that, just because the IRS isn't going to question it, but it's just one of those subjective things that the IRS can't prove that they didn't do anything. Now, I suggest you actually put them to work. Okay, let them do something. Let them, know that they're earning money. Set them up. Does that answer your question, citizen? So instead of your grandchildren freeloading on you, you should put some of them on payroll. They don't have to be your kids. They could be your family members.
I actually pay them to do work. I do.
Well, we got to put them on the books. I don't see them on your business.
Okay, well, we can do that.
I'm sure, your grandchildren could help you with social media. They could clean up your office. I know what your
They've been
desk
doing
looks like.
painting and landscaping.
Okay. Deduct your pets. Okay. So one workshop, we actually covered strange but true tax write-offs. Now, these were things that the IRS didn't like. They didn't allow them. They disallowed them. And these people actually went to court. So another thing people don't realize is that the IRS is not the final decision. They don't have that power, okay? The IRS is an administrative government body, okay? They enforce the tax laws that Congress creates, okay? Now, unless you're under criminal investigation and you have an IRS agent with a badge and a gun, they don't have the power to do anything, okay? In the end, yeah, they have the power to take your assets to do stuff, but that's only if you haven't followed the rules. Okay, but you could challenge the rules, okay, and you could actually go to court. So this one case was where the taxpayer, the business owner, was writing off veterinary bills and cat food, and the IRS said this isn't a business deduction. So they went to court, they presented their case, and the court said this is absolutely a business deduction. Why? Because the cats, they owned a junkyard, and the cats were keeping the rodents and the snakes out of the junkyard. So the court said that this is a valid business deduction. The cats served a business purpose. Now, I've done this myself. Hi, Sydney, how are you? So I had a client, they
Good,
took
Joe. Thank you. How are you?
good. They took a stray dog in. Okay, now they were in not a good part of the neighborhood. They had a warehouse with a lot of electrical equipment. They were actually games. They were like Space Invaders and stuff like that. That's how far back they made a fortune off of Space Invaders and asteroids. So they got this dog, and he was actually a watchdog. They kept him in the warehouse, and we wrote off all of the vet bills, all the dog food, everything. And they were actually under criminal investigation at the time. Okay, they were charged with all kinds of money laundering, tax fraud. I wasn't their accountant at the time. They hired me to clean everything up. But I had no problem taking the dog because it was a valid business deduction. We have a client right now who has a parrot. The parrot is with him everywhere. He's on his in his videos. He brings them to our mastermind meetings. So I told him we're going to start writing off the parrot. It's part. He's an actor and a comedian and a writer. So I said, well, it seems to me like that parrot is part of your identity. So, and it's not a big tax write-off, so you're not taking a big, it's not a big thing, but you're not going to find a lot of the things like writing your kids off. You're going to find a lot of little things. Okay. So that's that. Now, okay, so today, it used to be office in the home was a risky thing to do. Because if you were a sole proprietor, you're telling the IRS, hey, I'm taking part of my house as a business deduction. And the only way to do that is to estimate the square footage. Okay, so this is another one of those things where the IRS would actually have to come to your place, measure it, and then say, well, and they're going to say what they always say, how do we know that you use this for business? And my comeback is because my client said it was, and we took pictures, and there's ways to document it. Okay, so I know Susan has part of her house set up just for business. She's got her desk there. So we write off part of her house. We write off the utilities, the real estate taxes. We can depreciate part of the house. I don't even know if we go that far to do that. Susan, if we haven't been, remind me. Also, any of the furniture that's in her office, in other words, anything, even they can be pictures, tables, anything that's in your business space. Nowadays, I don't know anybody that doesn't have a home office. Now, when you're an S Corp, there's a special way to report this. And it doesn't show up as a home office, it's stealth. Okay. It shows up as rent, interest, taxes, whatever the nature of those expenses are. It shows up as depreciation. Okay, it shows as we have a client now, she has, well, before COVID, she actually had, so she's a nurse practitioner, she had a room in her house. She would have merry maids come in and clean the house, clean her office. Okay, that was a write-off, business write-off. Okay, now when you're a corporation, there is no special form for office in the home. Okay, there's no special form for it. So there's a couple of ways to do this, and the way that I recommend is you actually do a reimbursement from the corporation to yourself. What I advise my clients is to keep everything that's personal, and then you can reimburse yourself from the corporation to yourself. So for instance, let's say, and we have clients, they're renting a house. Okay, they don't own the place, they're renting. So we take the square footage of the house, we take the square footage of the office, and it could also be storage space. We've had clients that use their garages as storage space. Anything that's for business. Okay, we do a spreadsheet. Now, if you're familiar with doing reimbursed expenses, if you ever work for somebody or had somebody work for you, and they give you a report, and it's the same thing as a petty cash report. Okay, what it has is the dates, the amounts, and totals. So for this, and I actually have what I call an accountable plan. I'll share it in the chat before we're done today. And you do a spreadsheet. You pay everything personally, you pay your utilities, your rent, you pay it out of your personal account because you don't want to commingle business and personal. Okay, that's not good. Okay. So at the end of the month, end of the quarter, you fill out the spreadsheet and then you simply write yourself a check for the total, and then you have categories: utilities, rent. Oh, and I brought up that Merry Mates thing because some things will be 100%. Okay, like Susan bought a couch for her office. Okay, the couch is 100%. So some things will be the percentage of business use, and some things will be 100%. Okay, turning vacations into business is not that difficult. As an accountant, I have to take up to 40 credits of CPE a year. Well, guess what some very smart entrepreneurial accountants started doing? They set up CPE courses on cruise ships that just happen to go to places like the Virgin Islands, Alaska. Okay. So I'm actually on a business trip. I just happen to be in the Virgin Islands. Okay. So depending on what your business is, okay, all you have to do is have some sort of business activity on that trip. Okay, you might not be able to deduct all of it, but let's say you're a real estate investor. Okay, and you want to, and we actually have a client that is doing real estate in Hawaii now. They bought a condo, they're doing Airbnb. So when they travel there, that's a business trip. They're going to take care of their property. If they want to search in other destinations, like the Bahamas, like wherever, that's absolutely a business trip. At one point, I met Susan because I was in a mastermind group in California. I was traveling like every other month, California. Yeah, sometimes I went to the beach there, but most of the time I was in meetings, in mastermind meetings. Did I have a good time there? Most of the time. But so you can definitely business size, if that's a word. You can convert your and a lot of the stuff is converting stuff that you're already doing personally. In other words, my cousin is already supporting her son. Okay, what I'm saying is, hey, let him buy his own clothes. We're going to give him a salary. Now he'll learn the value of money. Okay. The office in the house, you're already paying for that stuff. Okay. We want to take as much of stuff that we're already spending on. And if you're in business, this is one of the benefits of having your own business. Okay. Where you could, and this is what all businessmen do. If you're rich enough, you go out and you buy a jet. Imagine having your own personal jet and you can fly anywhere and it's always for business. What do you think Richard Branson does? He actually started his own airline. So, and try to tell the IRS anything he does, everything he does is for business. All of these people, everything they do is for business. Okay. Do you have any questions? Okay, so this is something that we have done. So we subscribe to something called send out cards. Okay, one of the greatest, what do you call it now? Public relations, marketing things that I have ever come across. Okay, what is it? We send a card and some brownies to people on their birthdays. Okay, even my family members, when it's their birthday, I'm not sending it to them. It's coming from my business. It's coming from Bedrock. Okay, so you could buy all the brownies, all the Girl Scout cookies, all of anything that you want, and you could make them a tax write-off. Okay, now it cost us, I think, $3 to send somebody a brownie for their birthday. It's some of the best money that I've ever spent. I get clients that I never talk to until they get the birthday card and the brownies, and all they do is thank me. So if you're already buying people birthday gifts, whatever, make it into a tax write-off, and it's not really that difficult. All you have to do is document it. And normally, this is how we work it. I tell my clients, if it's coming out of your business account, I'm assuming that it's for business. Okay. Business gifts are anything that's $25 or less. Okay, so you could spread goodwill. You can use it for your marketing. And everybody loves getting a brownie, believe me. Here's some fun things we can write off. What did I do with this? Fun things. I think we covered a lot of the fun things. Do we have any questions? Comments? Let me see what's in the chat here. So if there's anything that you like to do for fun, why don't you put it in the chat and I'll tell you if there's a way for you to write it off. Okay. Some of the fun things that I do, I've already mentioned. You can go to seminars for your business. You can go to seminars in exotic places. Okay, that's one of the things that you can do. Susan, are there any fun things that you do? That I know you've done a lot of fun things. Can you share anything that we've been able to write off for you? Are you there? Okay, so that's all the content for now. I do have a short video to share with you. It's looking for it. How about we just do this?
How did you meet Joe? Okay, regarding Joe and I know each other, oh my God, 30, 40 years. We went to college together. We were in the same fraternity. I did have a different accountant at that time, but then I let go of my friend from high school and went with Joe.
I actually left my other accountant for Joe. It was 2019 or 2020. forget the year exactly, due to a crowdfunding campaign that we underwent for raising funds for one of our films.
What kind of business do you have, Scott?
I'm in the wholesale jewelry business. I work for manufacturers and I work with all the retail jewelry stores, in Florida and then also national accounts.
So my business is out of film production. I started that business with my wife as a way to further her career. And
When did you start working with Joe?
We've been together ever since. He's helped me, many years ago when I had my audit, and he came with me on the audit, and we actually won. And that was his first audit case. And he actually won the case for me where they said I owed money, and I actually left the audit with a check.
we had everything clearly documented, itemized. Really, I think just our documentation in order. I'm a pretty organized person. Went to my other accountant at the time. He's like, "Yeah, it looks good. Just send it to the IRS. Should be fine." So then I did that. IRS basically didn't even look at what I sent him, and came back to me and was like, "You still owe me $18,000." So I went to my accountant and was like, "Okay, well, can you help me?" He's like, "No, I can't help you. You need to get a lawyer. Here's like a lawyer. We'll charge you like a retainer,
A fortune, right?
$5,000 plus all the." I'm like, "Well, what's the point of that? Then I might as well just pay that case. It's ridiculous." Did some research. My wife actually did a lot of research and found Joe and his team. And after conducting some interviews and understanding kind of how they approach things, we thought it was the right move to switch teams. And so we hired Joe. He was willing to fight for us, resolve the audit, and to where it went from owing $18,000 to owing nothing because we were in the right with everything we had provided. Joe reviewed everything in detail, saw everything we were doing, was kind of appalled by the IRS's lack of review and response to what we provided, and he fought for us.
Have you had any experience working with the team?
We do get status and updates from the team from the bookkeeping side to address any issues that come up as they come up. So there are email communications with the team that show that they're prompt and in reviewing the documents that we provide them on a monthly basis, and just making sure everything's in order and ironed out. And that's great to me.
Yeah, it makes a big difference having a good accountant on your side that knows the laws, that's able to stand up against them.
Right.
Because a lot of people freak out, and but if you got a good accountant behind you, kind of let him do the work, and you'll be surprised up at the outcome.
I'm actually a client of his. He does my accounting and my taxes too. So I've just been very impressed. It's taken such stress off of me. Just doing taxes is now easy.
Starting this business with my wife has really allowed me to maximize deductions, because as a W-2 employee, man, they stick it to you. Like,
Yes, they do.
In every way possible. You get no deductions. They've limited your state and local tax deductions. They've done everything possible to stick it to you as a W-2 employee. And that was all under Joe's direction.
So, he's been great that way, always updating me with the new tax laws, etc. As a W-2 and as a 1099, he always taught me, the best ways to, help my taxes and help put more money in my pocket. Nothing.
Right. Thank you for that, Susan. All right. So somebody did ask in the chat about writing off workshops and seminars. And the answer is yes, absolutely. Anything related to my business. Now, I read a ton of books. I listen to, I have an Audible account. I'm always listening to books. Everything I do with that is business. Okay, even personal development, mindset stuff, anything like that. Now, I just thought of a couple of other fun things you could write off. And I did skip over a couple going back to my cousin's situation. So there are, if you have a business and you have employees, and that means yourself, if you have whoever, there are what we call non-taxable fringe benefits. Okay, now I'm going to take this off for a second so I could see everybody. Non-taxable fringe benefits. So let's say you want to write off going to a gym. Well, if you have employees and you're going to offer that to everybody, well, guess what? That gym expense became a business write-off. Now, the thing is, you can't be a sole owner on payroll and say, I want to give myself a gym membership. That's not going to be a write-off unless you're a personal trainer. Okay, I have had a client, he was a personal trainer, and I said, he wanted to know if, what the heck was he? He was, I think, a karate instructor or something. So I said, well, nobody wants to hire an out-of-shape karate instructor, so I would definitely. Now, is it aggressive? A little. Okay, but you're only talking about maybe $360 a year. It's not a big expense. And I can make an argument for it. So anytime I can make an argument for a tax write-off, I'm taking it. Okay, I'm not gonna, I don't work for the IRS, I work for my client. Now, if there's something like, you can't write off your haircut. Okay, Donald Trump tried it, and that's one of the reasons why he's still being audited. But anything personal, you can't write off your clothes. Okay, you can't write off your laundry unless you're a nurse. Okay, and you're washing your uniform. Okay, so if you have a uniform, so now we just ordered, or we're in the process of ordering Bedrock shirts. It's going to be a collared shirt with our logo on it. You better believe I'm writing that off. Okay, so those are some of the things. So there's non-taxable fringe benefits. Twitter, okay, they just, Elon Musk just decided they're not giving their employees free lunches anymore. But think about this, if you have employees, okay, you can write off your lunches, your lunch, their lunch. You're going to have a business meeting during your lunch break. Okay, all of that stuff, your coffee, snacks, you can even buy brownies and stuff for the office. Okay, as long as it's for business. And so now I think I'm gonna share with you, and then we just got a couple of more slides. I'm gonna share my secret weapon that the IRS, it works 1,000% of the time. I've used it in the last 2 audits. James Wells was one of them. He talked about it. And so the standard thing that the IRS uses, and I'm pretty sure they train them this way, to ask the question, how do I know it's for business? Now, I came across this over 30 years ago when I started doing a lot of tax audits. And, they have this crazy record keeping requirement for auto expense. And they tell you they want to know the date, the time, who you met with, how many miles it was, and you got to keep track of your miles. Well, I had three or four clients. Now, they weren't my clients. I had been working for a firm that actually, it's another story, but they were a criminal enterprise and they got a lot of their clients audited. So I was handling the audits. A lot of them were insurance people, so they did a lot of traveling. They kept all the auto records the way that the IRS says they're supposed to. In all four cases, the auditor took the book, flipped through it, and said, "I'll give you 40% or 60%." Meanwhile, we had taken like 90%. My response was, I did a whole calculation. I did their miles, the total miles for the year. This is what we came up with. What do you mean you're only giving me 40%? And their response every time was, how do we know it was for business? Okay. So it became a routine that I learned, and I learned a lot about the audits in that position. What I learned was there's different levels of audits. Now, when you get that first audit, that's like the rookie audit. Those are the people that haven't been there for a long time, and they're just going off a checklist. Okay. They don't like when you appeal. They don't. So what I learned with that was I would say, okay, how about this? You disallow 50% of the auto, and I'll take it up with your boss when I appeal this. Well, then I realized that the IRS is always open for negotiation. Okay, it's not a closed book. It's not black and white. None of this stuff is. Okay, that story with the cat, that's a real case. You could look it up. You could look up the case, and my aunt worked at the IRS, the case with the stripper that had breast, what do you call it, Susan? The politically breast augmentation surgery. And the IRS didn't like it, and the tax court actually said it was a depreciable asset. It was a business asset that increased her earning capacity as a stripper. Okay, so what's my secret weapon? It's section 162 of the Internal Revenue Code. Okay, 162 describes what qualifies as a business deduction. And what qualifies is on the facts and circumstances of the case. There is no, oh, this is deductible and this isn't. If it's for a business purpose, it's deductible. Now, business people aren't always the smartest people in the world, and they spend money foolishly. Right, Susan? All of us, myself included. If I told you some of the things, my friend Scott Factor there, one time, my sister was baking jewelry, believe it or not. She was doing her own handmade jewelry. And I thought, oh, we could turn this into a business. And my friend Scott was in the jewelry business. So I think we probably put $500 each in, and we thought we were going to sell this to like Macy's or something. And it just wound up being another tax write-off for me. But it was business related. So what? I was an accountant I thought I could get into the jewelry business. It was crazy. But people have done crazier things, okay? And they spent, as long as you're doing it for business, okay? Now, I use that. Now, James' accountant was foolish. Okay, he didn't have my experience, because guess what? I fixed that for James with a 3-paragraph letter, literally. I said, and it went like this: I disagree with your audit findings. My client has documented all of these business expenses. We've shown clearly that they went into it was a movie that they produced. They did it for profit. Okay. Just because they didn't make any money yet wasn't their fault. But in their audit, the agent said, you haven't proven these are business deductions. So I said, under section 162, my clients are entitled to all of these deductions. Please adjust your proposed audit findings accordingly. And the next response we got was, okay, we agree, you don't owe us anything. Okay, that's the secret weapon. I also used that in a case where the IRS was bullying, and that's what the IRS is doing to people now. They're bullying them. They were trying to get this poor woman who took over her husband's trucking business because he was sick. She went out of business. She lost a lot of money. And they said none of the deductions were for business. She had $250,000 worth of wages. She had $80,000 in insurance, $50,000 or $100,000 in fuel costs. And I looked at that. I said, "Are you kidding me?" The guy was no longer, the agent was no longer with the IRS. It had gotten so far down the line that the only option we had was to deal with them. We only had a couple of weeks, and then we had to file a petition with the tax court. Okay. So what I told them was, I said, if we go to court, I want to see what the judge says to you when you claim that none of these were Section 162 business deductions. They sent her an apology letter. They said the letter that you received was an error. It wasn't an error. It was because the IRS is just shoveling this stuff through the system. They want to get, and they're doing it to millions of people. Okay. So I just have a couple of more slides, basically self-promotion. And I want to let you know about our CFO program. So one of the reasons why I found that small businesses don't hire accountants is because we're too expensive. Okay, and that's the truth because there's not enough accountants. Well, we came up with the Bedrock CFO package for those single-owned companies that don't want to spend $200-300 a month to do something really simple, which is keep their bucks. Okay, we start our CFO program for new businesses at only $57 a month. Okay, it was created based on the need and based on the fact that I can organize the system to make it profitable for us. You know, I'm an entrepreneur. I'm in this for profit, and we found a way that at $57 we could still. We're not going to make millions of dollars off of this program. I understand that, but that's not the intention. My intention is to help people navigate this crazy tax system that we have, where the IRS is literally out of control. Okay, you got crazy auditors. I'm finding more and more of them than ever before in 40 years working with the IRS. I'm finding the IRS is bullying business owners and just regular people on a regular basis because they're getting away with it. Now, what is this? It's almost like having your own, it is having your own accounting department. You don't get one accounting specialist, you actually get two. I am overseeing all of the accounting. Everything is geared towards tax minimization, taking advantage of a lot of the things that we talked about today. Some things we didn't talk about, like pension plans. That was another thing that my cousin could do, because if Johnny was on the books, she could actually start a pension plan for him. Imagine being a 10-year-old and you got a 401k. You could start an HSA account, health savings account, which is where you could take non-deductible medical costs and now you can make them a business write-off. Okay. Also, we like to see people have cash flow. So we're looking at your books, not only to do your taxes, but we're doing a quarterly P&L for you. And you know, we invite all of our CFO clients to meet with me on at least a quarterly basis. Now, not everybody takes advantage of that, but it's part of the CFO package. These are some of the benefits. Okay. Like I said before, I have a knack for reducing people's stress. I tell people things that nobody ever told them before. Now we're running a special because it is coming up on Black Friday. For new clients, we are offering the first 3 months free. Okay, so not only do you get an unbelievable price, but you're going to get the first 3 months free. Tax returns, you're also going to get $150 off on your first year's tax return. So everything also, we are transparent. Okay, all of our prices are set up front. And if you want, you know, you can book a chat with me. Just go to timewithjoe.com. Also, we have an affiliate program. We love writing affiliate checks. Most of our new clients come from referrals. A lot of our students have become affiliates. Okay, so we like to teach. We like to get new clients. Now, this isn't for everybody. You know, I have to tell you, our CFO program is not one size fits all. It's for people that are willing to give up control of their finance. Not, how could I say this? Willing to let us do what we do good so they can do what they do well. Okay, we have a YouTube channel. Belle, if you're still there, if you could help me out here and put the link. Also put the link to your YouTube channel. Belle is a great great songwriter and singer, and I'm trying to promote her because I want her to get a record deal, and then she'll be a Bedrock client. Subscribe to our YouTube channel. We're trying to make it to 1,000 subscribers because then we can monetize it. That's another dream of mine, to actually make money doing what I love doing. Again, book a chat with me. I love talking about business. Whether you just have an idea for a business, if you're like Tammy and she has been in business for a long time, let's just book a chat, no obligation. And that's my story. I'm sticking with it. Do we have any other questions? Oh yeah, recreation activities. You're gonna, oh, come on. How many people go golfing? Okay, I actually have a friend, Mike, what is it? Jeff Wolf. I was gonna confuse him with Mike. Mike Wolf has the CEO adventure thing where they go, they do
Jeff.
things. Jeff Wolf. Did I say Mike? They do adventures. Okay. Adventures, CEO adventures. And I don't recommend this for everybody, but they'll go zip lining, bungee jumping, whitewater rafting, and it's all right off. The bowling league, you could start a bowling league with your business people. You can do it as a networking event. I know Tammy likes to, you still do a lot of networking, Tammy? So I know COVID like put that all in it, but yeah, you could have a networking event. Well, I used to go to networking events at bar restaurants. You got a free meal, some drinks, and it was all a tax write-off. So yeah, absolutely. Yeah, so who is this? I don't get your name. Oh, Sylvia. Yeah, you got, yeah, any cruise. So listen, any cruise you go on, bring your business cards, bring your slideshow, talk to people about your business. So now you want to document this also. So what I tell people, when you go on vacation, get proof that you've been trying to promote your business. You know, get business cards in that foreign country. You know, visit places, do whatever you got to do to show, hey, I'm trying to do business here. I just happen to be, you know, I'm going to try to sign up the Pope, so I'm going to the Vatican. I always wanted to see the Vatican. Now I'm going to, why is that funny, Susan?
Yeah,
I'm
funny.
going to the Philippines. I'm going to the Philippines, and I turned it into a business event. Why? I was actually going there because I want to get the heck out of New York for a little while. I got a lot of students, my team members, and then I said, oh, let's do a workshop. Now that whole trip became a business write-off. I asked Susan and Sydney if they wanted to come, but they wouldn't go as luggage. So they didn't want to go in the luggage bin. But
So, you
yeah,
know,
so
one time, Joe, I went to Costa Rica for a couple of weeks. And while I was there, I interviewed entertainers, some strippers, and because for my relationship book, I interviewed them and videoed the interviews, which made the entire trip deductible.
and you have the documentation.
Yeah,
Did you say you interviewed strippers?
I did.
Do you still have those videos?
I do.
All
But they
right.
weren't stripping when I was interviewing them.
I understand. I'm joking. But yeah, if you don't, so Susan's got an interesting business called Getting What You Want. She tricked me into signing up. I'm gonna let Donald in here. And then when I realized what the trick was, that she wasn't teaching me how to get relationships. She was teaching me how to have a relationship with myself. So sorry that I spoiled the fun for everybody, but she is, you're a treasure, Susan.
Thank you,
I'm
Joe.
blessed to know you and have you as part of my team. Okay, so how will document, okay. So yeah, so this is another thing, and I talk about, here's another tidbit. There's something called a de minimis rule. Okay, it's powerful. It means that you could take expenses that the IRS doesn't even want to spend time on. It used to be about $25 for each item. Now it's more like $75. And it was all based on a tax case. There was an entertainer named George Cohan. Okay, and I never actually read the case until yesterday. So I was always talking about this case, and the case doesn't actually say anything about a de minimis rule. It doesn't mention $25. It doesn't mention, now it's 75 just because prices have gone up since 1930. That was like 90 years ago. Anyway, George Cohan had a business. One of them was he wrote plays, and he did some other things in entertainment. And he went on the road a lot. Okay, he traveled all across the country. The problem was George didn't like to keep receipts. So the IRS disallowed all of his deductions, 100% of them. And it went all the way to the tax court, and they talked about reasonableness. They said, listen, it doesn't make sense for you to disallow all of his deductions, because obviously he stayed at these hotels. He took trips. He paid for the train, and he proved this, not with receipts, with other documentation, other proof. Okay. So according to the IRS, they want to see a receipt. They want to see a receipt for everything. In fact, forget about the de minimis rule. They'll still ask you for a receipt for that $9 item. And you know what I'll tell them? I'll say, disallow it, and I'll take it up with your supervisor when I appeal. Because they're not even supposed to be bothered with that. What do you mean a receipt for $9? All I got to do is document it. And what does that mean? I could take a picture of it. What did I buy? I just had my brother-in-law is starting a business on eBay. So he explained this to me. He's taking out $250 cash every week, and he's going to garage sales, antique stores, any place he could find knickknacks. Okay, and he's paying cash. And I said, well, are you keeping receipts? It's like, people don't have receipts at these garage sales. So I said, well, take a picture of it. Take a picture of where you are, document it. This way, if the IRS says, I want to see proof, that's proof. Normally, so with our clients, a lot of transactions are done through a bank or credit card account. Okay. The fact that we are recording it on their books is documentation. So we have the statement, that's a paper document, and we have us recording it on the books. We also have the process. Okay, the process is, listen, if you have a business account, anything you write off through there, I'm considering it as a business deduction. Now, if the IRS doesn't like that, I'll get somebody to give us an affidavit saying, hey, this guy always came to my store. He always bought stuff for $6 and I didn't give him a receipt. In other words, that Cohen rule, what they said was, listen, you can't just say arbitrarily, oh, you don't have a receipt, it's not a tax deduction. It's based on the facts and circumstances. What makes it a business deduction? Because I was using this to conduct my business. I bought $3,000 worth of brownies because I was going to give them to my clients as birthday presents. It's not my fault I left them in the garage and they all went bad. Okay, it's hard, so once you have this sort of proof, it's almost impossible for the IRS to unprove it. Okay, if I take pictures of my office, okay, in my house, and I come up with floor plans, and I have to, what are they going to do? Come to my house and say, oh no, you measured wrong? They're not going to listen. The truth is, they can't even answer the phone right now. The IRS can't even answer the phone. Try calling them. If you figure out a way to get, no, the way I communicate with them now is by mail. Okay, they answer the mail. They don't answer the phone. They are crippled right now. Okay, so I'm telling people, there's a lot of people that haven't filed returns for years. And I'm trying to put the word out there. Now is the time to file them. Now, when the IRS is still broken, they're going to be hiring over 87,000 people. They claim they are over the next 5 years. I don't know where they're going to get 87,000 people that want to work for them, but they're also getting a ton. They're getting billions of dollars that they never had before. All thanks to COVID, because they sneaked this in one of those COVID laws. They could never do this normally. They snuck it in. Okay. So that's the story. If anybody wants the accountable plan, just connect with me, Joe at Bedrock Business Builders, and I'll be glad to email it to you. If anybody wants to make an appointment with me, have a free chat, it's just timewithjoe.com. And do we have any other questions?
See any?
Yeah, I like the thing about bowling. I think I'm going to start I don't even
Appallingly.
know, but I should, yeah. Okay. I think that's it, folks. Thank you all for attending, especially Tammy, my old friend, and some new friends. Joshua, I believe that you booked a chat with me, Joshua. I think that I saw it. And Donald, I think you showed up late. There will be we do have the recording. I remembered to put it on this time. So anybody that was here, if you signed up, you will get a link to the recording. All right, thank you to all my students for showing up, and I hope to see you in December when I'll be there. All right, thank you, everyone.
Thanks, Joe. Bye.
You're welcome. All right, Joshua, we'll see you soon.